This is the FFR Trading Market Minute. And again, this is a daily candlestick chart of the SPY, the ETF for the S&P 500. We left off last Wednesday. I was anticipating, you see the red candle day there, I was anticipating a pullback, potentially maybe to fill this gap, best case scenario back to this support. We didn't get that. Here was the target I was expecting eventually after the pullback, but we went right to the target here and filled the gap from way back here on this prior day. So we are starting to get some divergence here between our price and oscillator. So we'll see how we end up today. This is Wednesday. Right now, market is pretty much trading where it opened. We'll see if they do start to pull back at least to this level here. So let me redraw these levels here. So again, expecting a pullback and then to retest this and eventually break that. I do believe that we will at least attempt to go on to make new highs, but I don't think it'll be a straight line there. But the reason being, let's look at the bond market. Now, here's a monthly chart of the TLT, that's the 20-year Treasury ETF. And you can see we had a head and shoulders pattern on the monthly chart in bonds. I think I pointed this out to you before in an earlier video. They broke the neckline here and came all the way down and hit the head and shoulders pattern target there into this support, which has been the support going back to 2003, 2002, 2004. And we've got a rally here. This will be a good, strong rally for the month here in November. And I believe that rally will continue if we close, once we close the month, whatever the high of the month is. You can see the oscillator was oversold here, letting us know that a bottom was probably going to be being put in here, and it has crossed above the moving average. The RSI here has crossed above the moving average. And that just tells me if we close the month, whatever the high is, if that high gets taken out next month, this should get some further follow through to the upside. And this is really a big reason as we see interest rates, as bonds rise, interest rates are coming down. That's good for stocks. And that's why this rally has been so ridiculously strong. Some of the key economic data points next week: Wednesday's gross domestic product, Thursday's core PCE, and Friday's ISM manufacturing PMI. Have a great holiday. We'll see you back next week at the FFR Trading Market Minute.